Chat with Traders episode 154 is supported by NAME, the National Association of Active Investment Managers. So, like I'd mentioned to you the other week, right now, NAME are accepting applications for their 2018 Shark Tank Strategy Competition. This is ideal for traders and investors who have developed a strategy and who can show a live track record. Enter now and compete for notable prizes. Plus, who knows, this really could open the doors to a few beneficial relationships. Get all the details at name.org/traders. That's NAAIM.org/traders.
Markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
Hey team, I hope you're doing fantastic. This is episode 154. Welcome. Coming up is a chat I had with Andreas Koukorinis. Andreas lives in London, and in 2013, he co-founded Stratagem Technologies, a tech startup using AI and machine learning to trade sports as a financial product. These sports predominantly include football, tennis, and basketball. But for Andreas, his roots are in trading instruments and markets that most of us are more accustomed to. He's worked for the likes of Morgan Stanley and Deutsche Bank, and before Stratagem came to be, he was trading at DeepValue. From listening to this episode, you'll hear a few interesting things. Firstly, Andreas speaks about his exit from financial markets and entry to sports betting and some of the other obscure markets he's considered where rigorous trading principles could quite possibly be applied also. Then, as sports markets exist mainly for the purpose of entertainment, what opportunities does this present for sophisticated investors, and what types of information Stratagem is using to make predictions? And then we go out with some chatter about AI and whether modern technology can realistically generate superior returns compared to more traditional approaches. I think Andreas struggled a little bit to sit still for the duration of this podcast, so I'll just apologize for any rustling you happen to hear coming from his side of the track. But anyway, here it is, my conversation with Andreas Koukorinis.
Now you're going to ask me all the embarrassing questions you want to ask.
Okay, cool. All right, well, let's get going because we're, we've got limited time here. So, I don't want to spend too much time talking about this, but just so we can get a bit of an understanding from where you've come from and how you've arrived at the point of where you're at right now. What is your background in trading like? What have you been doing for the past kind of 15 years or more?
So I started in 1997, 98, initially as an intern for a bank that doesn't exist right now called SG Warburg on the FX options desk. That was before the euro. And then after university and grad school, because I'm Greek, I ended up starting to work at Morgan Stanley on the emerging markets desk. And again, I was an options trader, so mostly derivatives and then long-dated derivatives and so on and so forth. So I did that for a few years, and I ended up being the guy that sort of they were plugging into whenever there were major crises around the world. And after that, I got given the opportunity to move to New York when the structured credit derivatives market was picking up. So around 2004, I think it was, I moved to New York. And for the second time, I had lived there for a little while before that. And I ended up trading, default swaps during the first crisis, the auto crisis of 2005. And that was sort of the impetus of a lot of the things that I started doing in my professional life, which was basically looking at relationships between different asset classes. So in this case would be equity versus credit, would be equity options versus credit derivatives and so on and so forth. And I kind of basically ended up doing that for about 13, 14 years. Yeah, so that's sort of just my background.
And then just before you started Stratagem, you were working at a place, DeepValue. Do you want to just tell us a little bit about some of the things that they were involved with?
So when I left my sort of hedge fund job at Fortress, I was one of the impetus of the move was that essentially technology is going to eat the lunch of most traders, and I needed to get really a good understanding of the electronification of markets, really. And DeepValue was set up by a guy that I've known for a long time, and it's essentially an algorithmic trader predominantly focused on the New York Stock Exchange. So for a while, it had exclusive rights to sort of selling things like VWAP algos and TWAP algos on the New York Stock Exchange, and then basically trading flows on the back of it. So I took a stake in the company, and I basically got immersed into the R&D group at DeepValue with the idea of trying to bring, some of the background as a relative value trader and as a macro trader into the more automated type of trading. And it was really useful because I learned a lot about essentially the various technology stacks that you can use for algorithmic trading. I got a chance to sort of, build my own strategy, automated strategies, and then really think about the transition and the process that you go from I'm just a trader who puts on a trade. Because as a human trader, there's a finite limit to the number of trades you can do on a given day, mainly because you have to do homework, you have to sort of pick your securities, you have to think about entry and exit points and so on and so forth. Whereas with a machine, really it's a function of your compute power and the volatility in the market. So I learned a lot of those things, and that was sort of in part some of the impetus to start Stratagem.
Okay, so in many ways, this was the first time you'd actually been exposed to algorithmic trading and a lot of the automation.
Yeah, on a scalable way, yes, definitely.
Okay. All right, well, just tell us a little bit about what is Stratagem, and also give us a bit of an idea on how it's growing, because you've been doing it for a couple years now. So I think you've got a sizable team behind you now. So yeah, just give us a quick rundown on Stratagem, and then we'll probably get into the nitty gritty.
Yeah. So Stratagem is essentially designed from the ground up to be a machine learning first trading company. So with a particular focus, at least for the time being, in the sports markets. So we started the company originally sort of at the early to mid 2012, and it started off my living room with two guys that still work at Stratagem. And the idea was, can we approach the sports betting market with the same lens that we look at financial markets, rather than just as a value-based trader? Because as a sidestep, most of the people who are professional gamblers or quantitative prop traders in gambling and so on and so forth have a particular approach, which is they develop their own model and they try to find essentially what they call value, which is really a mispricing between the market and their model over the long run. And that difference is called the edge, and they try to maximize, the amount of volume they put through the market on a given period to capture that edge. We believe there are, all sorts of different things you can do around that concept that are that come as an origin from financial markets. So, rigorous risk control, risk management, take profit, looking at sort of bets as time series, things like that. Looking at the mean reversion and the trends within particular games. So all of these things have essentially a need for large data manipulation. and scalable computing power. So I started off Stratagem with a purpose of basically building a company that would be focused on those things, with the underlying premise that we also want to be experts in a very, very specific niche of how do you apply machine learning in non-stationary trading environments. So that's really what we do. And that sort of involves essentially three things, which is collecting lots of different sources of data and unifying them in a way that can give you a predictive signal, building the technology stack to deploy that signal, and then doing research around the various trading algos that you will put into the market once you have the data and the technology stack.
Okay, and Stratagem, correct me if I'm wrong here, but it's essentially a hedge fund, right? And there's also another part to it, which is more of a
So if you think about this sort of infrastructure, essentially we tend to think about the products you can cut off it, and a hedge fund is an investment vehicle, i.e., an investment product, and that's sort of one of the things that we quote unquote offer to people, which is not something that's very widely available. And then we also offer a couple of products that are more, tailored to the individual trader. So we offer something which we call Strata Pro, which is essentially a Bloomberg-like terminal for sports betting. And we offer StrataBet, which is, similar to the ticker tape, I would say, for sports. It gives you automated insights, statistical artifacts that are happening within football games right into your phone.
Now, before you actually decided to settle on the idea of sports betting, you also looked into a couple other avenues as well. Do you want to share what they were?
Yeah, so the idea was, as a trader in the sort of broad, deep financial markets, so fixed income, equity, and so on and so forth, you learn a set of skills and you learn an understanding really about how markets move and what can cause prices to move. And I had wanted to find markets that still were not as saturated by human expertise or professional trading expertise as, and then I looked at cryptocurrencies, peer-to-peer lending, sports bets, and then online advertising space. So the type of trading you can do sort of on the online advertising exchanges that is run by, Google and Microsoft and so on and so forth.
Okay, so after exploring or looking into all those different avenues, why did you decide to roll with sports betting?
So there's a couple reasons. So the first one is it's a growing market. So it's sports is around us everywhere, and there's more and more accessibility to in-play sports viewing, and therefore sort of in-play trading. It's a 24-hour market, really, because you can sort of trade at sporting events everywhere in the world. It's fairly fragmented, therefore it's fairly inefficient, and by that I mean the concept of an exchange, the way it exists in financial markets, doesn't really exist, right? So there's not a central clearing counterparty. There's not a place where the price is predominantly driven by the supply and demand of everybody, and you can have one touch point to the market. The technology stack is fairly arcane, and more importantly, there is a lack of sophisticated human capital that has gone into the market. Now, having said that, there's a couple of outfits and people who have been extremely successful in the sports betting space, but I think predominantly the reason is because there haven't been, that many people exploring and applying rigorous trading principles as is in other markets. So if I put all those together, I thought that, and more importantly, sort of another thing that I think is really important is that the asset class is really, really short duration. So by that I mean is, if you think about a trading day, you start at the beginning of the day and you end at the beginning of the day with cash. So you can lever yourself up multiple times without really needing a very big balance sheet to take positions. So you can be a really big trader without needing to hold a very big cash balance. Whereas in a hedge fund space, it's kind of the other way. You basically have a large asset pool and you have to hold a lot of it as encumbered cash, and you can only trade with a small fraction of what you have. So it makes the game completely different, right? You're not as reliant on holding large cash balances. It really sort of allows you to recycle things. And it's very akin to, high frequency or short-term systematic trading that you'll see in financial markets. So those were really the primary drivers for me to decide to go into sports.
Yeah, and had this been like a hobby, like had this been something that you had a little bit of interest in prior to launching like a full-fledged fund and business, etc., around sports betting, or were you completely green when you came into this?
I would love to say yes, but the answer is probably no. I've been sort of a student of trading for a very, very long time. So probably since, the mid 90s, and I think that sort of has been the primary driver for me, much more than the underlying market. So my basic principle is that if you have a trading process that is robust and scalable, and as long as you do enough homework to understand the fundamentals of how your market works and what drives, each individual formation, I guess, of prices, then it doesn't matter what you're trading. Now, I wasn't, I had a passing interest into sports bets, but nothing to the extent that it would drive me to sort of get into the market as a professional. That only happened after I started spending more and more time on it, after 2011, 2012.
Right. So essentially, if we were just to summarize that, you, in many ways, you kind of piggybacked on your trading experience and the trading principles which you'd learned over 15 years or so to guide you into this new market.
Yeah, I think one of the things that I learned in my career is one of the things that I had been exposed to beforehand is that it doesn't really matter. Like I had been exposed to a lot of different markets and I had traded a lot of different instruments. And I think that sort of gave me the confidence to kind of think about it. Because if you think about it, like a bet is really just a binary option, right? So if you think about it in terms of option speak, well, you kind of have the main components that you would have in anything else, which is volatility. Then you would have, realized volatility. You have your strikes and so on and so forth. So if you start thinking about it in those terms and you break it down to components that, you're familiar with, then it kind of becomes easier. I would say the sports betting market has various idiosyncrasies that you learn along the way. And I think it's really important to understand price formation and price action and really, what does the flow of information tell you in terms of the volume that trades? And so a lot of the things that I look at is, I break things into sort of, I guess, fundamentals, which if you make the parallel between, let's say, the equity market and sports is really sort of, you look at an earnings report. In our case, we have analysts that write previews of games. So we want to see, who is the starting lineup? Is there any player who's particularly missing? What past performance is attributed to the lineup that is coming into play? Have they been having, a very heavy schedule? Did they have to travel a lot? And so on and so forth. So I tend to look at the valuation afterwards, you would say. So similar to other sports bet traders, I would look at basically, we have our own proprietary trading models, which are basically, you're akin to your Black-Scholes model in an options world. And we would look at, is the bet expensive or is it cheap? And why is it cheap and expensive given the inputs that go into the model? And then finally, I look a lot about in terms of technical information and positioning. So do I know what other smart participants are doing? If you break down the flow that goes into the sports market, there's really, mostly retail, which for the most part we don't think has any information edge. And then there's a couple of people which, similar to us, some of them with a lot longer history, who we call syndicates, and essentially they are information traders. They only trade if they have an edge on the rest of the information. So we tend to try and decipher the flows that they drive and see if there's any information we can glean from that. So I guess one of the bigger differences that we have versus other people is we tend to look a lot at the movements of the order book and see if the price movement, given the volume that trades, is it significant or not? And is it causing moves that are disproportionate to what we expect or not? And we have our own ways and models to basically decipher information. And that's sort of the three components that we put into kind of every trading decision.
Okay, so I think what might be helpful is if we can hear a little bit more about the sorts of bets that you're placing, right? So I might be way off here, but it kind of sounds as though you're doing a lot of like in play during the game bets. Would I be correct?
Yeah. So we you can think about the stuff that we do as sort of broken down into three sort of verticals. So you can do bets on the given sport, right? You can do bets given your a view on timing. So there are what we call dead ball trades, which are basically trades that we put before the game starts and we hold until the maturity of the game. So this is your classical, prototypical sports betting. And then you do in-play trading, which is essentially bets that you put after the game has started and you have processed information. And then the final bit is bets that you'll hold up until the end of the season. So we would look at, for example, who's going to win a league, who's going to get relegated, who's going to win, come on top of the ATP, who's going to win the NBA finals, who's going to end up playing for the NBA finals, and so on and so forth. And then we'll build a position, let's say for the longer ones, and then we will put, hedging instruments along the way. Now that's sort of, if you break down the trading given the duration of your view. And then we also have, I guess, two types of trades. One is directional trades. So we have a view on who's going to win the game, how many goals are going to get scored, and so on and so forth. Or we have relative views, which is we think, for example, over 2.5 goals is cheap, but under 4.5 goals is expensive. So we will put a position over 2.5 and under 4.5. We'll play around with the ratios. We'll wait for something to happen, and then we'll close the position. Or we'll do things, for example, where we will wait for a surprise event to happen in the game, like a surprise goal, an early goal, or something like that, and then look at the dislocation that happens in the market, and then take positions appropriately, and then we'll close as those things normalize. Those are broadly, the strategies that we would follow. And then we would trade on all sorts of liquid markets, starting from goals and natural handicaps. And then we'll trickle down to corners, which are sort of the three main markets we would look at.
Okay, so which games are you actually betting on?
So we trade the top, I would say, 26 leagues around the world in football. And then in tennis, we trade... So going back to football, that would mean, here in the UK, the Premier League, English Champ, League One, the Spanish League, the German League, the Portuguese League, the Greek League, the Australian League, the Chinese League. So we trade basically the top 26 leagues around the world, and then Champions League, Europa League, World Cup, and European Championships in football. There's obviously a lot more leagues to trade, but these are the ones that we are sort of concentrated on. And then in tennis, we trade ATP, WTA, men's and women's, everything down to challengers. And we've been mostly trading 3-set tournaments, and now we're moving to also trade 5-set tournaments. And in basketball, we trade NBA, EuroLeague and then starting to trade some of the smaller national leagues, that are pretty dominant, I would say, in the European area. So Greece, Spain, Turkey, Germany, Italy, Russia, Finland, anywhere really that there's a betting action in the basketball world.
Okay, and are those kind of more obscure, I don't know if that's the right word, but less known, less popular leagues, are they more lucrative for you?
Some of the smaller ones tend to be more lucrative in terms of the inefficiencies. The problem is that the scalability of your trading is not as applicable. So really, there's a risk reward between, can we be big enough to make it worth our while, or is it just a small passing market? On the other hand, you don't want to be really too big or go to the really, really big markets with a dominant effect, because then you signal a lot of the information that you have that others may not have. So we try to sort of have a blend between smaller leagues and bigger leagues. Obviously, the bigger leagues are very interesting because you can put big positions on. So if you think about it in absolute terms, let's say the World Cup or the Premier League is sort of the deepest part of the market, where you could easily put a 1 to 2 million position on a given game. Whereas if you trade down to Australia or MLS in the US, trading somewhere between 10 and 50K is kind of the limit of how much you can trade. So that's really how we tend to think about it. In basketball, the EuroLeague and NBA are probably the deepest markets. So you can do a couple 100K a game. Then the sizes go down pretty quickly. And then in tennis, I would say the Grand Slams are really sort of where a lot of the volume would trade and be fairly decent on those. If you look at, for example, recently the final of the ATP finals in London, you had over, 15 million got matched in one game in one of the premier sort of betting places here in the UK, which is just a fraction of what would have traded globally. Now, the trick there is that, as I pointed out in the beginning, there isn't one place where you can go and access all the volume. You've got to be connected to multiple venues at the same time and have the infrastructure to pull everything together to see really the global picture of the market. So building the infrastructure is really a key to being successful, I would say, in sports betting.
When you say that it's key to be successful in sports betting, playing at the levels you're playing at?
Yeah, I would say just in general, like, you want to make sure that you are able to observe the price action where the professionals trade, because they would have information that most likely an individual wouldn't have. And you want to make sure that you look at all the price moves up until a game starts, because usually what most professionals would do is they would wait for the public to come and place their bets, and they would skew the market in a way to make attractive for them to be a late comer. Generally, people try to be as late as possible when they're placing their bets, and the reason for that is they want to make sure that there's no any new piece of information that's coming into the market. There's no injuries or anything really that could have affected the performance of either the team or a player. They want to have the complete up to date before they place their bets. And also, the other factor is the market, it tends to be the most liquid as you go closer to in play. So, if you take, for example, today it's a Wednesday, if you look at the games that are getting played on a Saturday, usually the market would have opened, but it's a very wide and liquid market because there's a lot of volatility around the information of certain players. The schedule of the teams has been incredibly heavy over the last 2 weeks. There are certain players that may have been injured. There's no tennis this week, so for the next 2 months, I guess. So there's nothing to do there. But similarly for NBA, the season is kind of starting to pick up. There's more and more volume trading. there's a lot of flying around, people getting injured, last minute substitutions. So you want to make sure you know about all of those things before you take a position. So that's one. The second thing is most people need to, and this kind of goes back to another question you asked, need to void themselves from the emotional aspect of sports, which is really, it doesn't matter who you support, right? It's a market like any other market, right? If you were trading currencies, are you supposed to have a favorite currency, right? So it's the same thing with sports. Like, it doesn't matter which the teams are. You need to look at them in a very, very objective manner, rather than I cannot play this team because I like them, or they have my favorite player, and so on and so forth. And I think for a lot of people, it's really hard to draw the line between I'm emotional about something, and I understand that fully, versus it's my job and I kind of sit on my desk and basically I look at two teams or two players as they are two securities, and really looking at, the same thing as if you were reading earnings reports, am I going to buy or sell this stock based on they're going to miss or beat earnings? What positions are the hedge funds accumulating? Really, you can draw a lot of parallels between how people trade long-short equity or long-short currencies versus the sports betting market. There's a lot of similar factors that drive performance.
This episode of Chat with Traders is supported by Health IQ. And here is why Health IQ matters. Because if you consider yourself to be pretty healthy and you have life insurance, there's a good chance that you're probably paying more than you need to. Now, I'm not trying to bring the mood down, but if you're physically active and health conscious, then you have a 34% lower risk of all-cause mortality. Health IQ recognize this, and that is why 54% of their customers save between 4 to 33% on their life insurance through savings exclusive to Health IQ. To see if you qualify, get your free quote today at healthiq.com/chat, or mention promo code CHAT when you talk to a Health IQ agent. That's healthiq.com/chat to get your free quote. Now, you said a little earlier that one of the things which has attracted you to sports betting markets, or sports markets, I should say, is the fact that there's a lot of retail participants, okay? And as you said, most of them, it's probably safe to assume most of them don't have a great information edge, okay?
Yeah, I would say there's two reasons for that. Is people don't have very good information. They read the paper, they don't really pay attention to the details, which is kind of the reason why we've been also developing products for the everyday trader, because we think there's a gap in the market there that should be exploited, which is essentially people should focus on this market, right? There's a lot of inefficiencies. The bookmakers make a lot of money out of it, and really because it's a market designed to be there for entertainment purposes. So people like to place a bet when they go out with their friends, or where they sit down to relax at the end of a day, and so on and so forth. So they don't necessarily take it seriously, which I understand. There's nothing against that. But on the flip side, it means that the majority of the volume that trades is really agnostic to the nuances that go into the price formation. So, and the bookmakers will tend to skew prices one way or the other to make sure that they attract people to put those trades on.
Right. Well, that's sort of what I wanted to ask you is, like, to what extent are you actually trying to outsmart other retail punters compared to actually just trying to outsmart the bookmakers?
It's almost entirely against the bookmakers, I would say. And in some ways, we are evolving our business model to be more of a partner to the bookmakers. And by that, I mean, we're becoming slowly a third-party liquidity provider to the bookmakers, like a market maker, because no one wants to lose money, right? So the same way if you were a hedge fund trading over the counter derivatives, you would not, and you were, say, dealing with JP Morgan, the trader JP Morgan, if you were always making money off him, he would be very defensive with his pricing. Now, the difference with bookmakers is they don't actually have to trade with you, right? It's not a legally enforceable contract, it's not a forward or a future. They can basically shut you out of the market, nor give you any access to liquidity. So the bookmakers are really the only place where you can get aggregated flow. So you have to be able to talk to a lot of them, and you have to make sure that they have an advantage in giving you access. So we try to basically provide third-party pricing, if you like, or liquidity information to various bookmakers in exchange for them allowing us to take some amount of the risk that they bring on their books for ourselves. So similar, I guess, to a market maker. And on the flip side, we probably align ourselves mostly to retail because we have opened up our infrastructure and our platform to individuals so that they can, both either look or process the same type of information that we do, or learn to do what we do. And I think there's a race to the end, right? Which is, I'm looking forward to the market in 5 or 10 years, and hopefully we'll be as commoditized as other instruments, and people would really look at it as an alternative financial asset. And the reason is very simple: is if you put your money into an equity index fund, right? How much do you know about the underlying equity companies that are involved there? You may have a view on the equity market and the politics around the macroeconomic policy and so on and so forth, but you kind of have a much more of an interest in what's happening in the sports field. And also the information is more widely available if you do the homework, right? So really, I think people should look at sports as, having a small proportion of their assets, similar to they would do, in equities or bonds or currencies and so on and so forth. Now, I know that's a pretty radical view, but I'm hoping that, by opening up infrastructure and not be as opaque as other participants have been, that we would attract more people into the market.
Now, just changing gears a little bit, I'd like to talk to you a little bit about, I guess, the data, actually coming up with these strategies, testing them, that sort of thing, right? So why do you believe, because you're a very data-driven operation, yeah, why do you believe that sports are predictable through using essentially historical data? Like, are there fundamental reasons behind your predictions for why you believe a certain team should achieve a certain outcome? Or would you say that you fall more into the camp of data mining?
I think we kind of have a foot on both camps. So the predominant factor is that sports they're repeatable events, right? So if you think about all the algorithms that have been developed for computer games, let's say, what's interesting about them is that the rules of the game tend to be static, and the same thing holds for sports, right? So in football, you have 11 players, 90 minutes plus overtime, red cards, yellow cards, and so on and so forth. So there's no factors that are extraordinary that can drive, for the most part, the sort of outcome of a game. And then the behavior of the teams, again, for the most part, as it is observable through time, can be deciphered, right? So whereas if you look at financial markets, you have, micro factors that kind of drive the pricing of a security, and you have macro factors. And you don't really know what's going on in the macro part of the landscape. It's really sort of a large amount of uncertainty. Whereas in sports, the events tend to be repeatable upon themselves, right? So if you are able to observe what's happening in 100,000 games, then for the most part, you can understand the strategies of the teams, the strategies of the coaches, how certain players play. And I think it's important to understand that for the most part, teams don't try, and I know this is going to sound a little bit counterintuitive, but let's say in the case of football, they don't try to score goals. They try to put themselves in situations of high expected value where they have the highest chances of converting those situations into a goal. By that, I mean, if you think about a shot on goal that happens on 3 yards or 5 yards outside the box with 1 or 2 defenders, that has a lot higher value than a goal that gets scored from a free kick, 25 yards out from an angle with 11 players in front of you, right? Those, you need to be able to look at those differences in how those situations result into an outcome. And I think the same thing goes for basketball, where if you look at the emergence of the Golden State Warriors and how they've been driving this sort of three-point shooting, well, really, what does that mean? It means that, maybe your percentage of hitting the three-pointers is lower than hitting the two-pointers, but the expected value of three-pointers is a lot higher. So, people, I guess, in the professional sports environments tend to look a lot at expected values, and we are kind of the same. So I think that's something that is very, very particular to sports. And I like the fact that there's a drift to it, and then there's variance around it. So if you can put your head around those two concepts, you can be really good at it. So I would say that's sort of the fundamental part. And then the other part is to really look at the motivation of the teams, right? So a team is a business like any other. So, teams want to do well because it results to a lot of money. So they will try to win specific tournaments, and then specific games will have particular value because they correspond to points and they're higher up the ladder. So you can actually think about their motivation. And if they have a game where they perform very well, very poorly, you can also look and measure the sort of impact it would have on follow-on games and so on and so forth. So there is a logic to it, which is, can I model those factors? Can I think about them in a parametric way? And then there's the unstructured way, which is, I have all this data. Can I make sense out of it? Are there patterns that can emerge? And then we kind of try to combine both. And, in some ways, we also try to sort of generate our own data by using, methods to extract information from live video, where we track players, information of players, and we look at those things to, again, ascertain all those aspects. So not just the expectation, but really how do teams play? Is there a particular part of the game that their energy picks up? Will they relax if they achieve a certain score line, and so on and so forth?
How predictable, sorry, let me start that again. How accurate are you trying to be with your predictions? Like, I know in sports betting there you can get particular types of bets or opportunities that have a really high kind of payout compared to risk.
That's a really good question, actually. That's a really good question, because there's the concept of long term, right? Which is we try to do very well in the long term. So we try to have an edge over the market over the long term. And then the natural response to that is, well, what's long term, right? So that really depends on the horizon of your trades. So if you are placing bets, let's say dead ball, that you will hold throughout the duration of the entire game, you basically are hoping that over the period of a season, your predictions, some will be great and some will not be so great, but on average, you have, somewhere between a 1% to 3% differential versus what the market predicts, basically. So if the market is predicting that someone's going to win a game by 50%, you're hoping that, really you're realizing somewhere between 52 to 53% to be profitable over the period of a season. If you are doing that in play, obviously because you can place a lot more bets, then you can afford to be higher margins of error. But the flip side of that is that actually what's happening is the markets in play are a lot more inefficient than the bull markets, but sometimes it's harder to put your position on because the market is moving around so quickly. So it really is a combination of those two things, right? Is you want to have a prediction accuracy that is better versus what the market is pricing, not in absolute terms, because again, we're trying to beat the market, not our job, I guess, is to make money, is not to be right, as traders. So I think that's sort of a fundamental driver. So we try to do that. And also at the same time, we try to do it in the markets where we certainly put our bets on at the best possible price versus our prediction.
And are you ever trying to seek out arbitrage opportunities? Like instead of taking a view on a particular sports team and thinking these guys have a high probability that they're going to win this particular match, is it ever a case where you're taking different sorts of bets and you're looking for arbitrage opportunities, perhaps between, what one bookmaker is offering compared to another, or a situation similar to that?
We don't tend to look at it as much because it's not really as, I would say it's a great strategy to do for individuals or smaller traders. For us, that we are kind of a wholesale operation, I would say. It's less profitable because it requires you to deploy, the margins are really, really small and you have to be really, really fast. And there's a natural limit to how much money you can make, right? Because really you're limited by the time to access the market. Those arbs don't last around for a very long time. They're usually very infrequent. Now, having said that, we do tend to look at if there's arbitrage value, but mostly as a signal for our models. And the reason for that is because it does tell you which side of the market the bookmakers are more willing to give you risk on. So if you think about it, the reason bookmakers open themselves up for arbitrage is because they don't have a place where they can clear their own risk, right? So they're hoping that by opening themselves up for an arb, people would take them out of the residual positions they don't want, and that happens by normalizing the value equations.
Again, just to shift gears here, I know we've only got another few minutes before you've got to run, Andreas, but I'd like to speak with you a little bit about artificial intelligence, because I know that plays a big part in what you're doing there at Stratagem. I think one of the questions I would like to ask you about this, when we hear AI, to anyone who's not involved in the space, it sounds like a very sophisticated thing, and rightly so. Do you feel as though by using AI and some of these more sophisticated techniques that you're able to achieve greater returns than, let's say a professional gambler would have 10, 20 years ago?
Yes. I mean, the answer is absolutely yes. So, but I think it's a combination of both. The misconception, I guess, in the public space is that the models are what drives the difference. And I'd say there's, we owe a lot to more complicated and more sophisticated models that are out there. But there are two artifacts that really drive success in machine learning AI. One is the quality of your data. So the better the data you have, the better your predictions. And the second is the ability to do scalable compute. So the prevalence of AI has happened over the last few years because availability in compute power has become cheaper and cheaper. And we've been, benefactors of that. Sorry, we benefited from that. So I would say that, yes, absolutely. And we continue to, and one of the things that we're very proud of is that we continue to both push the research boundaries in terms of AI research, but also the applications of it. We do spend a lot of time trying to find the right models and can we collect the right data and so on and so forth. And I think that's what drives a lot of our edge is that we try to stay at the forefront and try new and different things every time. Yeah. So and I think that is differentiating everything really, right? So it's happening in the mainstream markets and it's definitely happening in the sports markets. And in a way, I would say it's much more appealing and applicable to sports markets for the reasons we talked about earlier, which is that the rules of the game tend to be static, right? So because the environment at which you're trying to predict is there is noise around the prediction, but it's within boundaries, right? So you will never have, a 2008 Lehman crisis type event in sports, right? Because the rules of the game don't change. So I think those are the fundamental drivers of success of AI in sports.
When you say the rules don't change, what about like regulatory rules and that sort of thing? Does that have an impact on what you do?
I think if anything, it will have a positive impact because regulation tends to will tend to open up markets. In this case, most markets are closed right now, so there are very few betting venues around the world or where betting is legal. But I think because regulation is going to change, taxation is going to come in, people are going to legalize. They're starting to legalize gambling around the world. I think that's going to open up the markets significantly.
Okay. And how about like the US? I mean, I'm in Australia, but in the US, from my understanding, there's only a couple states which gambling is legal.
We don't have a clear view on what's going to happen in the US as a company, but we are very eager and alert, I would say, observant in what's happening. I'll put it to you that way. We're very keen to find out how things will unfold over the next 18 months. But we're hopeful the market will open.
And just sort of taking a step outside of betting and financial markets, etc., you're also quite involved in artificial intelligence as like a technology.
Yes.
When we hear about artificial intelligence in the media and, online through different sources, it's often it seems like it's often very hyped up, okay? Like, obviously, journalists are trying to get you to click and read the articles. But from someone who's like almost on the inside, do you think it is overhyped, or do you think we're really starting to make some headway into artificial intelligence developments?
I think both sides of your argument are true. I think there's a great exaggeration in the press on what's happening. The reality is we've managed to master, playing computer games from the 1980s. That's the actual factual evidence, right? Most of the successes we've seen are on simulated computer games and simulated events, and starting to see applications in robotics. Now, having said that, that's attracting a lot more people into the space, a lot more money into the space, and that fuels development. And I would go as far as saying that AI is going to have an impact on the world similar to what electricity had 100 years ago. So it's going to dramatically change everything that we do, and it's going to make things a lot more easier for the everyday life. But also, it will open up fundamental questions about, how much automation and how much, artificial intelligence should we allow on our every day-to-day activity. And I think for the markets, the interesting thing is the structure of the market is going to change because automation and robotics are making things a lot more difficult for the everyday human trader.
Yeah, okay. And would you say that's across the board or just on very short time frames?
I actually think it's starting to be across the board.
How so?
Well, because you see a lot of the bigger hedge funds are essentially investing a lot of time on both long-term and short-term predictions using machines. I would say that in the microscopic price formation, so from seconds to minutes, I think it's really hard to compete against machines. And the natural evolution of that is they're going to start expanding the time horizon at which they make decisions, and then compute is going to be getting cheaper and cheaper and cheaper. So making longer term predictions, which is really what you're saying, is going to become easier for machines. So I think that there's already a dominance in the short time frame, and I think that is going to easily translate through time to longer time frames. So the impact is going to be felt across the board. Now, having said that, there's always going to be parts of the market that are really hard to trade for machines, like, in financial markets will be emerging markets or distressed debt, things that require still human expertise. But in my markets, like sports, where, everything looks and appears similar to a computer game, then I think that's going to be a lot less, the impact is going to be a lot greater.
Watch this space.
Yes.
All right, Andreas, I know you've got to run. Just before you do, though, if someone wants to find out more about yourself or Stratagem or artificial intelligence even, where is the best place to go?
Go to our website, stratagem.co. There's a lot of information around the company. I encourage everybody to give a shot and a try to StrataBet and Strata Pro. And I think in terms of AI, one of the best resources for me is the MIT Technology Review. It's a good place to go online and, check layman's articles that are written by experts. And, anyone who wants to drop me a note on LinkedIn or over email to find out more, they're more than welcome to.
Very good. All right. Well, as listeners know, I'll dig up all those links and pop them in the show notes. So, Andreas, really appreciate you doing the podcast, man. Let's keep in touch.
Thank you, Aaron. Thank you. Take care. Bye-bye.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.